Welcome back to the Daily Crypto Roundup. Today's crypto market is giving us one of those mixed, slightly frustrating but very important sessions where the surface-level price action looks weak. But underneath, there are still signs that the bigger bullish structure has not disappeared. Bitcoin is still holding around the $80,000 area. Ethereum is trading near $2,330. XRP has slipped back toward $1.38. Solana is hovering just under $90, and Dogecoin is still trapped around the 11-cent zone. But the story today is not just about red candles. It is about why crypto is struggling to break higher even while parts of the market are still quietly building pressure underneath. We have strong US labor data keeping pressure on rate cut hopes. Dogecoin trying to escape its long 10-cent range. XRP failing to hold a breakout zone. Consensus Miami bringing institutional crypto back into focus, and Bitcoin derivatives showing something very interesting. Negative funding may actually be a bullish signal, not a bearish one. Let's start with the macro picture, because this is the part that explains why crypto has not simply exploded higher, despite all the positive headlines around regulation, ETFs, institutional adoption, and Bitcoin treasury strategies. U.S. initial jobless claims came in at 200,000 for the week ending May 2nd, below the 205,000 consensus forecast. That might sound like a small difference, but for markets, it matters, because it tells traders the U.S. labor market is still stronger than expected. When the labor market remains strong, the Federal Reserve has less pressure to cut interest rates quickly. And when rate cuts get pushed further away, risk assets like crypto often lose some of the liquidity tailwind that traders were hoping for. This is why today's number matters. It is not because 200,000 claims suddenly changes everything on its own. It is because it adds to the wider pattern of economic data telling markets that the Fed may not need to rush. That is the key tension in crypto right now. On one side, the industry has a powerful long-term story. We have institutions building infrastructure, Wall Street paying attention, Bitcoin ETFs still shaping demand, stablecoins moving closer to mainstream finance, and major political figures talking about digital assets in a way they simply were not doing a few years ago. But on the other side, crypto still trades like a high beta liquidity asset in the short term. If yields stay firm, the dollar stays strong, and the Fed delays cuts, then traders become more cautious. Bitcoin can still hold up, but altcoins usually struggle more. That is exactly what we are seeing today. The market is not collapsing, but it is hesitating. And when crypto hesitates after a rally, attention quickly moves to the coins that are sitting right on important technical levels. Just before we continue, this episode is brought to you by Kraken, one of the most trusted crypto exchanges in the world. If you are buying Bitcoin, Ethereum, Solana, XRP, or Dogecoin, make sure you are using a serious platform with deep liquidity, strong security, and a proper track record. The link is in the description. Crypto trading involves risk, prices can move fast, and this is not financial advice. And please support the show by using our link below, and we will drop 20 XRP into your wallet. Now let's move to Dogecoin, because Dogecoin is once again stuck in that awkward zone where it has attention, liquidity, and a loyal community, but it still has not produced the clean breakout traders are waiting for. Dogecoin has been hovering around the 10-cent to 11-cent area, and that range has become psychologically important. The simple question now is whether Dogecoin can finally break out of that compression, or whether it stays trapped as traders rotate into other altcoins with stronger momentum. At the moment, Dogecoin needs a convincing move above resistance to prove that buyers are taking control again. Without that, it remains a waiting game. The reason this matters is that Dogecoin tends to move in waves. It can spend long periods doing very little, frustrating holders, and then suddenly produce violent upside moves when attention returns. That is why traders continue to watch it closely even during dull periods. A coin like Dogecoin does not need a complicated thesis to move. It needs liquidity, social attention, Bitcoin stability, and a clean technical trigger. If Bitcoin holds firm and the wider altcoin market improves, Dogecoin could quickly become interesting again. But if macro pressure stays high and traders remain cautious, Dogecoin may continue to chop sideways around the same range. For Dogecoin holders, the key level is simple. The market needs to see strength above the current range, not just another short-lived spike. A proper breakout would likely need stronger volume, better market sentiment, and confirmation that buyers are willing to defend higher prices. Until then, the risk is that Dogecoin remains stuck in a slow grind where everyone keeps waiting for the big move, but nothing decisive happens. That does not mean the Dogecoin story is dead. It means the market is demanding proof. And with meme coins, proof usually comes very quickly when the move finally begins. Next up is XRP, and this is one of the more important altcoin stories today. XRP slipped around 2.5% and fell below the $1.42 area as traders watched for a potential breakout. This is exactly the type of move that frustrates XRP holders, because the setup looked like it was trying to build, but the market did not yet deliver the confirmation. XRP has had strong narrative support around regulation, Ripple, payments, and the broader question of institutional settlement. But price still needs to cooperate. And right now, XRP is showing that even strong narratives can stall when the wider market is under pressure. The key issue for XRP is momentum. When XRP pushes toward an important breakout level, traders want to see follow-through. They want to see the price break, hold, and attract new buyers. Instead, today's move shows hesitation. That does not destroy the bullish case, but it does delay it. For XRP to regain control, it needs to reclaim the levels it just lost and turn them back into support. If it can do that, traders may start looking again at a move toward higher resistance zones. If it cannot, then XRP risks staying in a choppy range while the market waits for a new catalyst. What makes XRP especially interesting is that it is one of the few major altcoins where the narrative goes beyond simple speculation. It has regulatory history, institutional payment ambitions, a large community, and a constant stream of discussion around whether it can become a serious settlement asset. That gives XRP staying power, but it also means expectations are high. When a coin has that much attention, every failed breakout feels bigger than it would on a quieter asset. The important point today is that XRP has not collapsed, but it has lost some short-term momentum. The next few sessions matter because traders will want to see whether this was just a shakeout or the start of a deeper pullback. Now let's talk about Consensus Miami, because while price action is one thing, industry direction is another. Consensus is one of those events where the crypto market gets a clearer look at where builders, institutions, regulators, exchanges, and investors are focusing. The third day of coverage from Miami showed the industry is still thinking far beyond short-term price movements. The themes around institutional adoption, tokenization, regulation, infrastructure, and the next phase of crypto finance remain front and center. And that matters because these conferences are not just marketing events. They often show where capital, attention, and policy energy are moving next. The important thing from Consensus is that crypto no longer feels like a side project waiting for permission. The conversations now are about integration. How do banks use blockchain rails? How do institutions custody digital assets? How do stablecoins fit into payments? How do tokenized assets become part of normal finance? How do regulators create rules without crushing innovation? These are the kinds of questions being discussed now, and they are very different from the old days when crypto was mainly treated as a speculative corner of the internet. For investors, that does not mean every coin goes up tomorrow. It does not mean every project survives. But it does mean the industry's long-term direction is still moving toward deeper integration with traditional finance. That is the bigger story behind the short-term noise. You can have a day where XRP is down, Dogecoin is stuck, and Bitcoin funding looks strange, while the industry itself is still becoming more legitimate. That is why it is important not to confuse weak price action with weak fundamentals. The price chart tells you what traders are doing today. Events like Consensus tell you what institutions may be building for the next decade. And that brings us to Bitcoin, because the Bitcoin derivatives market is sending a signal that looks bearish at first glance, but may actually be more bullish than people think. Funding rates have turned negative in parts of the market, and normally, negative funding means more traders are positioned short than long. On the surface, that can sound bad. It suggests that traders are betting against Bitcoin or at least hedging against downside. But in crypto, when funding turns negative while the spot price remains strong, it can sometimes create a bullish setup. Why? Because if too many traders are short and Bitcoin refuses to break down, those shorts can become fuel for the next move higher. This is what some traders call the Great Derivatives Disconnect. The derivatives market may look cautious or even bearish, while the spot market is not confirming that weakness. If Bitcoin keeps holding key levels while funding stays negative, shorts are effectively paying to stay in the trade. And if Bitcoin suddenly moves higher, those shorts may be forced to close, creating a short squeeze. That can push price up quickly, especially if spot buyers are already supporting the market underneath. This is one reason negative funding is not automatically bad. Sometimes it shows fear. Sometimes it shows overcrowded bearish positioning. And overcrowded positioning can become dangerous when the market moves the other way. The bullish interpretation is that Bitcoin is absorbing pressure well. If traders are shorting Bitcoin and the price still refuses to fall hard, that tells you there may be strong underlying demand. This could come from spot buyers, ETF flows, institutional accumulation, or simply long-term holders refusing to sell. Whatever the reason, the result is the same. Bearish bets are not getting the breakdown they want. And when the market fails to go down on bearish positioning, it often starts to lean the other way. But we should not overstate it. Negative funding is not a guaranteed buy signal. It is a condition. It becomes bullish if Bitcoin holds support and starts moving higher. It becomes dangerous if spot demand weakens and the shorts are proven right. That is why the next move matters. If Bitcoin holds the $80,000 area and begins to reclaim momentum, negative funding could act like rocket fuel. But if Bitcoin loses that level cleanly, the market could quickly shift back into risk-off mode. The main takeaway is this. Crypto is not in a clean risk-on explosion right now, but it is also not showing the kind of weakness that would suggest the bigger cycle is over. This feels more like a pressure-building phase. The market is waiting for confirmation. It wants clearer signals from the Fed. It wants Bitcoin to either break higher or finally lose support. It wants Dogecoin to prove it can escape its range. It wants XRP to reclaim the breakout zone. And it wants to see whether institutional momentum from events like Consensus can translate into actual capital flows. For now, patience is the trade. Bitcoin remains the market anchor. If Bitcoin holds, altcoins get another chance. If Bitcoin breaks higher while funding is negative, the move could be sharper than expected. But if macro pressure keeps building and Bitcoin loses key support, then coins like Dogecoin and XRP may need more time before their next real breakout attempt. As always, do not get shaken out by one red candle, but also do not ignore the levels. This is the part of the market where discipline matters most. That is it for today's Daily Crypto Roundup. Keep watching Bitcoin first, because that is where the next major signal is likely to come from. Like and follow, and we will see you at the top.